Hi, I'm PNC Joe, and I specialize in explaining the ins and outs of commercial insurance to make it easier for you. Let's dive into employer liability insurance, a critical area that every small business owner needs to understand. This type of insurance is important because it shields businesses from potential financial fallout due to employee-related claims of injury or damage. Yet, navigating the myriad of policies and understanding what is covered can be a challenging puzzle, especially when the stakes are so high. Keep watching because in this video we will discuss these important topics. What is employer liability insurance? Why is employer liability insurance important? What are common coverages included? What is the difference between employer liability and workers' compensation? How are coverage limits determined? What types of incidents are typically excluded? How does employer liability insurance interact with other insurance? What steps should employers take to minimize liability risks? And a bonus topic at the end. Let's go through these points, one at a time. Employer liability insurance is a type of insurance that protects businesses if an employee gets hurt or becomes sick because of their job. It helps cover costs if the employee decides to sue the employer. This insurance is important because it can help the employer pay for things like legal fees and compensation to the employee, subject to the terms and conditions of the policy. Imagine if an employee slipped and got injured at work. Without employer liability insurance, the company might have to pay for all the medical bills and any legal costs from their own pocket. This could be very expensive and could even hurt the business financially. With insurance, these costs may be covered, depending on the policy terms, so the business doesn't have to worry as much. Employer liability insurance usually covers several things, subject to policy terms. 1. Bodily injury claims. If an employee gets hurt at work, this insurance can help pay for the costs related to the injury. 2. Legal defense costs. If an employee sues the employer, the insurance can help pay for the lawyer and other legal costs. 3. Medical expenses. It can cover the medical bills for treating the employee's injury. 4. Lost wages compensation. If the employee cannot work because of the injury, the insurance may help pay for their lost wages, depending on the policy. 5. Third-party liability. If someone else, like a visitor, gets hurt because of the employee's actions, the insurance might help cover those costs too, subject to policy terms. Workers' compensation is a type of insurance that helps employees get money for medical bills and lost wages if they get hurt at work without needing to sue the employer. Employer liability insurance, on the other hand, comes into play if an employee decides to sue the employer for their injuries. So, while both can help when an employee is injured, they work in different ways. Coverage limits are the maximum amount of money the insurance company will pay for a claim. These limits are usually set when the business buys the insurance policy. The business can choose higher limits if they want more protection, but this can also make the insurance more expensive. It's like choosing a bigger umbrella for a rainy day. The bigger the umbrella, the less likely you are to get wet, but it might cost more to buy. Not all incidents are covered by employer liability insurance. Some common exclusions include intentional injuries, if the injury was caused on purpose by the employer. Contractor injuries. Injuries to independent contractors may not be covered. Non-work-related injuries. If the injury didn't happen because of work, it might not be covered. Think of it like a rule book. Not everything is allowed, and some things are exceptions. Employer liability insurance often works alongside other types of business insurance. For example, if a business has general liability insurance, that might cover injuries to customers, while employer liability insurance covers employees. It's like having different tools in a toolbox, each for a specific job. To minimize risks, employers can provide safety training, teach employees how to stay safe at work, keep the workplace safe, regularly check for hazards, have a clear policy, make sure employees know what to do if they get hurt. These steps are like wearing a helmet when riding a bike. They help prevent accidents. Employer negligence means the employer didn't do something they should have to keep employees safe. If an employer is found negligent, they might have to pay more in a lawsuit. For example, if a company knew a floor was slippery but didn't fix it, and an employee fell, the company might be considered negligent. Not all workers are employees. Some are subcontractors or independent contractors, and they might not be covered by employer liability insurance. Employers need to know the difference and check their insurance policy to see who is covered. It's like knowing who can borrow a book from a library card. Not everyone might be allowed. I hope this breakdown of employer liability insurance has made things clearer for you and highlighted why it's crucial for your business. By understanding the nuances and taking proactive steps to minimize risks, you're well on your way to safeguarding your business and your employees. Remember, having the right coverage is like having a sturdy safety net. It provides peace of mind and financial protection when it matters most. If you have any questions or ideas for future videos, please let me know in the comments below.